also some good news coming through on the local economic front here. We've reached the highest level since February 2010, as I've said. We've got a question, though, the quality and sustainability of a number like this right at the top.
That's right. I think what we have seen is a lot of the numbers and the positive trends is really a rebound from the weaker numbers that we saw in the last quarter of 2011. If you take the average of our PMIs for the last 3 months of 2011, that averaged about 50.2, 50.4. And the average for the first 2 months of this year is about 55. So we've seen a 10% increase in the PMI averages for the last 2 months. And as you rightly say, I think a lot of it is a rebound from the weaker sort of economic conditions and manufacturing conditions that we have seen in the fourth quarter of last year.
But that's not to take away from the silver lining that has come through today, Abdul. I mean, for the South African economy, because the Business Activity Index, which makes up the largest contribution to this index overall, has seen a jump to a 5.5-year high of 65.2. So that's certainly encouraging from an activity point of view.
Definitely, and I think it's also quite revealing that our 65 level for business activity is the highest amongst global PMI sort of sub-indices as well. I think, as I've said, there is an element of rebound. We know that, for example, Metal Steel, they've restarted some of their plant in Newcastle, for example. We've seen a rebound, for example, in the petrochemical sector. Companies like ACI reported stronger growth in the fourth quarter of last year. What we must not forget is that the rand played a significant role in this as well. Given the steep weakening of the rand that we've seen in the fourth quarter of last year, to some extent we do anticipate and that we do foresee that some of that rand weakness is still impacting on the PMI numbers that we are seeing currently. So the negative from an expectations point of view is that the rand has started to strengthen quite significantly again. And that might impact on future PMIs as well. On
future PMIs, what about these new sales orders that we're seeing? Because the index is suggestive of robust demand filtering through here.
That's right. As I've said, I mean, anecdotally, we know that the steel sector in particular has been a prime beneficiary of stronger sales orders. Earlier this month, for example, BMW has announced an expansion of their plant operations in South Africa, which is obviously geared for the export market. But with all of these new starts, what you typically find is that you've got a situation where we see a recovery, first of all, in new sales orders, but then also because you're coming from a zero base or a low base, that recovery or that new sales orders being placed has a magnified impact on the overall index as well.
Yep. Also interesting to note is that backlog of sales orders numbers has increased as well. In tandem, Abdul, we're sitting at 43.6 from 39.4. Just how much attention do you pay to something like that where there's a backlog of sales orders? Because one would assume that would then have an effect on next month's reading.
That's right, and that typically points to the actual level of activity as well. An increase in backlog of orders obviously is indicative of suppliers and manufacturers' inability in the short term to fulfill orders as well. And then coupled together with the expected business conditions index and then also supplier commitment index as well, we have seen those indices trending upwards. So that bodes well for current activity and also activity for the next couple of months as well.
How are you rating capacity? Because where it's a challenge now for suppliers to fulfill that demand, I mean, surely we've got to be ramping things up moving forward.
Yeah, I think one of the other indices that we look at is capacity utilization. And capacity utilization has rebounded from a level of about 78 to about 85 currently. Bearing in mind at the peak we were close to 90% utilization levels. So I do think that there is still some slack capacity in our manufacturing sector, and that is maybe perhaps why we haven't seen the employment index, even though it has recovered somewhat, not breached that 50 level yet. So there's no new hires, for example, in the manufacturing sector because there is still some excess capacity. Having said that, if we do see a continuation of this trend of very robust increases in the PMI, we are likely to see some new employment numbers coming through in the sector as well, and that bodes well for the future.
Obviously, as you ramp up comes cost and additional cost as well, Abdul, and that's something that manufacturers have to contend with in a context where we've got on the price front the PMI price index declining by 5.7 points. Just how much of a challenge or a tough spot do you see this putting manufacturers in?
Again, we believe that that is a function of the strengthening or the rand currency impacting on the imported component of pricing. But as you rightly say, I mean, we are seeing further Eskom price increases. Some of the miners, for example, are going through some tough wage negotiations. And clearly that will impact on future ability to price, firstly in terms of imported pricing and raw material input prices, but then also on secondary pricing as well. Now, bearing in mind that our fuel prices, for example, next month is going up quite significantly, given the increases in the fuel levies and the RAF levy as well, we do anticipate that to have an inflation impact on the pricing index. And clearly manufacturers will, in an environment where end demand might still be soft, might have difficulty passing some of those price increases on to the end consumer.
We know that that has been a very big challenge for these manufacturers over the recent past. In the meantime, you touched on employment levels picking up and it's a scenario that slowly seems to be turning around here. It reached a 12-month peak, albeit it's remained below that all-important 50 mark. Abdul, what are your targets in terms of this next quarter that we're in at the moment on that employment front?
What we have seen is that from, I think, Stats SA, a recovery in employment. I think for the first time in a long time, we've actually increased employment levels rather than saw a decrease in employment levels. If that trend continues, coupled with very strong and robust economic activity, we do anticipate that that employment index, hopefully in the next couple of months, will reach that 50 level. Anecdotally, again, there are some sectors, for example, the clothing sector, we are seeing some restarts in terms of hiring on that side. That sector obviously has been decimated by imports from China and the Asian countries as well. And with our increased tariffs and given our potentially increased competitiveness with a weaker currency, that obviously bodes well for the future as well.